Welcome to Tesla Deep Dives.
The topic today, Tesla's FSD hardware debt, analyzing the painful $8,000 upgrade and the limits of vertical integration.
For years, Tesla's massive valuation has rested on the promise of full self-driving, but a painful truth is emerging. The company's aggressive, vertically integrated hardware development strategy has created a massive hardware debt. This is the hidden cost of constantly upgrading the FSD computer, a cost highlighted by the painful $8,000 FSD purchase price and the complicated upgrade path for millions of older vehicles.
Tesla has iterated its FSD computer multiple times. Hardware 3, released in 2019, featured a custom-designed neural network accelerator capable of 36 TOPS. However, the latest generation, Hardware 4, represents a dramatic leap, boasting a computing capability stated by Elon Musk as 3 to 8 times more powerful than HW3. The HW4 upgrade is far from a simple swap. It includes not just the new FSD Computer 2, fabricated on a 7-nanometer process, but also all new 5-megapixel cameras, a substantial jump from the 1.2-megapixel units in HW3. A deep dive teardown noted that while the manufacturing cost only increased by approximately 32% for the board, the total component cost for HW4 is around 3 times that of the previous version, signifying a major change in component complexity. The $8,000 FSD purchase price has become a significant public pain point, especially since the system remains supervised and requires constant driver attention. Critics, particularly on platforms like X and Reddit, often conclude the upfront fee likely isn't worth $8,000, preferring the $99 monthly subscription. This customer hesitation is tangible, with only about 10 to 20% of the estimated 4 million HW3 vehicles have purchased FSD outright. The debt became an official liability when Elon Musk admitted that there is some chance that Hardware 3 does not achieve the safety level that allows for unsupervised FSD. He promised that the roughly 400,000 to 800,000 customers who paid the full FSD price would receive a free upgrade to HW4 if needed. This is a flip-flop on an earlier internal assessment that retrofitting the system was not economically feasible due to the significant labor and parts required. This rolling hardware debt is a direct consequence of Tesla's vertical integration. While building its own chips, HW3, HW4, gives a technical edge, it forces the company to absorb the full cost of replacing obsolete hardware in the field. This future liability represents hundreds of millions of dollars in parts, service center labor, and logistical costs, creating a continuous strain on capital expenditures. Financial analysts are split. Bulls, such as those at Bank of America, have raised price targets after testing FSD updates, framing the company as an AI empire that is self-funding its pivot to autonomy. They highlight the fortress balance sheet with over $44 billion in liquidity and the ability to fund $20 billion in capex for 2026 without debt dilution. Conversely, bears and market skeptics focus on the execution risk. They note continued robotaxi rollout delays and the pressure on free cash flow, which contracted from $3.99 billion to $1.42 billion quarter over quarter as the company's capital intensity has increased. This narrative views the high 204x forward PE ratio as detached from short-term earnings, resting on a multi-trillion TAM that the hardware debt could undermine. Despite the significant and unresolved HW3 upgrade liability, the dominant market narrative for Tesla remains one of unconstrained AI-driven growth. The stock's premium valuation, driven by the promise of future robotaxi revenue and its deep vertical integration, currently outweighs the tangible hardware debt risk. But this debt creates a continuous, high-stakes trade-off between quarterly profitability and long-term autonomy development. Investors must monitor 3 key metrics. 1. The FSD subscription/take rate growth, as a strong recurring revenue stream can offset the capex of retrofits. 2. The official start and scale of the HW4 retrofit program, which will directly hit service and cost of revenue, offering the first quantifiable measure of the hardware debt. 3. commentary on Software 2.0 and FSD v13 v14 adoption, particularly the gap between HW3 and HW4 performance, to gauge if the hardware upgrade becomes an optional expense or an essential one for unsupervised FSD. Let me know what your thoughts and leave your comments. Thank you for joining us for this deep dive. To ensure you never miss a pivotal analysis, please like the video, subscribe to the Tesla Deep Dives channel, and hit the notification bell. Your engagement fuels our critical research.